All right, so let me give you an example then about how this car thing might work if you go buy a vehicle. I'm going to give you this example and I'm going to let you go. So let's say you go buy a $30,000 vehicle. Let's do no money down. We're not going to do a trade in. We don't want to deal with all that for this example, right? You got $30,000 down. Here's the difference between your good credit and your bad credit and how it will impact you. 30,000 bucks, no money down. You got good credit. You get a 4% interest rate, right? It's on 60 months. So that's 5 years. You get 5 years to pay for this car. 60 months, and then that vehicle that's 30,000 in interest, and at the end of the day, your payment's going to be $552 a month. $30,000. Now, not only brought this up about interest rates, but I want people to also know how much cars actually cost in terms of a monthly payment. Some people don't realize that. People say, "Oh man, I need a $250 car payment," and you need to know how much car that'll buy for you. So a $30,000 car at 4%, which is a good rate, no money down, in 5 years, you're going to pay $552 a month, and that equates to a little over $33,000. $33,000 over the life of the loan. So you're going to pay $33,000 for your $30,000 car. Conversely, if you have a 9% rate, which is a little bit more than double, it's a little bit more than double, and I use cars.com. If you guys want to go in and put in your own calculations and see what's what, I used cars.com for this particular example. So then if you got a 9% rate, you had 4 if you had good credit, but you got a 9% rate. And a lot of people have way over 9%, like 3 times as much. But if you got a 9% rate, you're going to pay $623 a month for your car. And if you do all the calculations, that's only a 70, only, which is a bad word. It is a 4-letter word. Only $71 more per month for this particular vehicle. But at the end of that 5 years, you wind up paying $4,260 more than the other person. So you wind up paying way more than the other person by just having a 9% interest rate. So you want to make sure that you get your credit together and you have it together in case you want to go buy a vehicle. Let's take that even same car, and I'll bring up 72 months if it's on 72 months. Because one of the first things that a salesman asks you when you go on to the lot? What do they ask you? They ask you, how much do you want your payment to be? Now, it's a whole bunch of reasons why they ask that, because they're trying to figure out this, that, and the other. It's a whole bunch of reasons they're asking you that. But that's not a question that you necessarily want to answer, in my opinion. But we'll get in the car buying another day if you want to. But $30,000 on 72 months. So now you're doing 6 years to finance this car. Your payment is, if you've got a 9% rate, your payment is going to be $541 a month, right? 9% rate. You're going to pay $9,000 in interest when that one is over. If you had better credit and you got a 4% at 72 months, you pay $469 a month, and you pay $33,768 at the end of your 6 years for your $30,000 car. That's what you pay. Now, here's the thing about longer financing, and one of the reasons they're asking you how long, what do you want your payment for on your car. The longer you finance the car, the bigger that gap is in between what the car is worth and what you owe on it. So if you end up trading that car in 3 years, if you financed it for 6 years and you've been paying that, you're paying a lot more in that interest part than you are on the principal for that vehicle, it's going to be a bigger gap. And that means that upside down we talked about before. So where your car might be worth now, it's worth $20,000, if it's even worth that. Let's say it's worth $15,000, but you still owe $20 on it. Then that's a $5,000 difference. The shorter your term of your loan, then you don't have such a big gap. So that's something to keep in mind as well when you're going out to finance a car. So not only how much can you afford to pay on a monthly basis, what your interest rate is going to be, and then how long you're going to finance that car for. There are 72-month loans out there for sure. That's becoming a norm, and there are even 84-month loans out there as well. That's starting to become a norm as well because of the price of cars, I believe. So look, if you're going to do a $30,000 car and you're getting a 9% interest rate, you might want to rethink it being a $30,000 car. Maybe you need a $22,000 car to help you out a little bit when it comes to the money side. No, the whole point and purpose is to help you keep money in your pocket, and that does not do it if you're going to pay a higher interest rate on your car. I did a show all about car financing. I think it was called Financing and other tips or something like that back in the day. So go back into the episodes and look for that one. It'll tell you a little bit about financing a car, leasing versus buying, and all those kinds of things. Do that. But look, this is the end of the show. Of course, I'm over as usual. So thank you again for listening to the 800 Credit Score Man Show. I hope some of this helped you guys today. If you got any questions, again, 800@creditscoreman.com. And you can get to my website, www.creditscoreman.com as well. You can see all of the things in my services page on that site that I talked about if you want to have your credit restored with somebody you know and somebody you trust. Get with the 800 Credit Score Man, you guys. And you know how I got to do it before I get out of here. Kobe, Cameron, and Carter, I love you, and there's nothing you can do about it. I'm out.